Ruby, Assistant Professor of Economics Department. Since in today's class, we are going to discuss about the meaning of banking, objectives of banking, as well as importance of banking in the today's class. See, banking is defined as a business activity of accepting as well as safeguarding money owned by other individuals as well as entities, and then lending out this money in order to conduct some economic activities. It may be making profit or simply covering operating expenses. We are using this money. So a bank is a financial institution only. This financial institution is licensed to receive deposits at the same time. It is licensed to make loans also. So there are two most common types of banks. One is commercial or retail bank, and the second one is investment bank. So depending on the type, a bank may also provide various financial services, ranging from providing safe deposit boxes and currency exchange to retirement and wealth management. See, in the United States, American banks, in the United States of America, banks are regulated by the U.S. Federal Reserve Bank, which is one of the world's major central banks. All above, the central banks are responsible for currency stability. So they control inflation, dictate monetary policy, and oversee money demand and supply in the market. Commercial or retail banks offer various services, including but not limited to managing money deposits as well as withdrawals. It provides basic checking and saving accounts, certificates of deposit, issuing debit and credit cards to qualified customers, supplying short and long-term loans such as car loans, home mortgages, or equity line of credit. See, investment banks here their services toward corporate clients. They provide services such as merger and acquisition activity and underwriting, among other investment services. So now let us see the meaning as well as definition of banking. So banking is the business of protecting money for others. See, a bank lends this money, generating interest that creates profits for the bank and its customers. So a bank is a financial institution. This financial institution is licensed to accept deposits as well as to make loans. So these are the main two functions of the bank. We can deposit our money, bank accept the deposits. At the same time, bank give loans to the customers. So they may also perform other financial services also. So the term bank can refer to many different types of financial institutions, including bank and trust companies, savings and loan associations, credit unions, or any other type of institution that accepts deposits. So a bank is a financial institution licensed to receive deposits and make loans. Banks may also provide financial services such as wealth management, currency exchange, as well as safe deposit boxes also. So there are some different kinds of banks, including retail bank, commercial bank, corporation bank, as well as investment bank. So in most of the countries, banks are regulated by the national government or central government. Now let us concentrate on the objectives of banking. See, there are some different types of objectives. First, let us concentrate on the business objective. First business objective is making profit. Bank tries to make profit. Second one, it provides services to the customers. At the same time, they are issuing currency. They are creating transaction media. At the same time, they are receiving deposit. They are making loans. At the same time, they are ensuring safety to the customers. At the same time, investment. The customers they can invest their money in the bank also. Then there are some social objectives. The first social objective is creating savings. Second was capital formation. Third one, industrialization. Fourth one, employment. Fifth one, developing living standard. And final one is economic development. Now let us clearly discuss one by one. First one is safeguard deposits. See, bank serves the main purpose of accepting deposits from public and safeguarding their deposit amount. So it guarantees the safety of funds to the customers for depositing their money in their accounts. The second function is providing loans. It advances loan to customers at both the short-term as well as long-term basis as per their needs. The bank provides loans out of the deposit that they receive and charges interest on the amount from customers. It encourages savings also. The banking institutions have an efficient role in encouraging saving habits among people. It motivates people for saving and depositing their earnings in bank accounts by paying them a fixed rate of interest on their deposited amount annually. The next function is capital formation. See, banking accelerates the capital formation rate within the country. It extends credit to various sectors of the economy. From time to time, it helps in uninterrupted continuation of the of all growth and development activities. Different industries as well as business approach banks for fulfilling their financial needs. The next important function is currency issue. Banking organizations does the purpose of issuing the issue which is served as a legal tender in country. The Central Bank of our country, that is our Reserve Bank of India, they print as well as issue all currency notes for the public. Then the next function is it enhances the living standard. It assists the people in improving their quality of life by providing them some credit also. The bank enables the customers in purchasing high quality and costly goods on credit basis or higher purchase system. The next important function is it generates employment opportunity also. So banking organizations also, it is very helpful in generating large employment opportunities within the country. It helps the companies in extending their activities by providing them credit as per their needs. So it will be result in increasing human resource requirement for various positions. Therefore, a large section of companies working within the banking sector itself. The next function is currency issue. So, banking organizations normally they are doing the purpose of issuing the currency. It is serving as a legal tender in the country. The Central Bank of our country prints as well as issue all the currency notes for the public. These are the important functions of the banking, and moreover, it brings economic stability also. The banking sector it plays a crucial role in attaining the economic stability. So there are the one who assist in controlling the depression and inflation phases. So during the time of depression, banks adopt cheap money policy and increase the flow of money in the economy. Whereas at the time of inflation, it follows a strict money policy to decrease the flow of money. It increases the interest rate on borrowings to control the people's spending during inflation. So the next function is creates money. The bank generates money in an economy by advancing loans to all those who are in need of funds. So it is one which grants credit out of the money collected by it from the public. So these institutions aim at maintaining sufficient flow of funds. And the next function is it facilitates trade also. So it is very helpful in doing both internal as well as external trade. Banks normally enable merchants in conducting trade by providing them proper payment facility, issuing letter of credit, discounting bill of exchange, and providing them other guarantee documents also. Next function is money transfer. So it enables people to transfer their funds rapidly, even to far distance places itself. So it has facilitated the payment system by providing various instruments such as the draft, check, or bill of exchange. Payment done through these instruments is more safe as well as convenient also. So instead of paying the amount as a cash amount, if we pay these amount through these instruments, it will be more convenient as well as safe. And the next function is transfer savings into investment. See, banking serve as the medium of transferring money from those who have excess of it to those who are in need of it. It collects people savings and provides loan out of these savings to entrepreneurs and companies for their expansion program. Bank converts the people's ideal lying funds into productive means. Next function is ensures liquidity. So maintaining a proper liquidity in the economy is another important role which is played by the bank. So bank regulates the money flows by adopting an efficient monetary policy. So during inflation, it reduces the money supply, whereas at the time of deflation, it increases the flow of money. So this is the another function of money. And the next one is transfer savings into investment. The banking serves as a medium of transferring money from those who have excess it to those who are in need of it. So I told you the excess money we are normally depositing in the bank. See, either we can use it for saving purpose or we can invest it for another business also. So working capital finance is business finance. It is designed to boost the working capital available to a business. It is often used for specific growth of projects such as taking on a bigger contract or investing in a new market. So different businesses use in these capital finance for a variety of purposes. But the general idea is that using working capital finance frees up cash for growing the business, which will be reworked in the short to medium term. There are many different types of lending that could be considered working capital finance. So some are explicitly designed to help working capital, whatever the industry we are in, while others are useful for specific sectors or requirements. So these are the important aspects in this today's class. Thank you, students.